Aloha and welcome to Java. This is for Thursday, December 7th, 2023. I've got mostly market stuff in here, but a couple of things at the end as always. So we had the volumes drop yesterday and the markets came under some pressure. So risk has dropped. We're actually below the 270 level now for our MMRI and the two main elements, the 10-year yield as well as the relative strength of the dollar. They both retraced and now they're at a support level. In fact, the 10-year yield is beginning to rise a little bit. There's very strong support at that 4.1 level for the 10-year yield and the dollar at the dollar 3.78. So I do expect if it goes down a little further, we'll probably hit that support. These two will rise. And as those rise generally, that puts pressure on stocks. So we'll watch the market retrace a bit more today, but should hold steady. The Bank of Japan, as we were talking about, kind of threw a little waiver in there yesterday of some of the things they were talking about their policies moving forward. So currently we've got the sentiment is what I would say is wary. So it's not fear yet, but it's much weaker in general. And we do expect the volatility to increase. We're watching these reports and numbers coming out. So today we are expecting continued jobless claims, as well as the Fed's balance sheet. And then going into Friday, we're going to get some earnings reports, as well as more unemployment and the crude positions. So those could have some interesting effects on markets tomorrow, as well as some options expiring. And I don't have the stocks up here. It's a bit early this morning, so not too much that those can indicate for us yet, except there's slight fear trade, a little wariness, as I said. So moving forward, really the story is the economy, the real economy. So we've got jobs. The labor market, as we found out yesterday, is cooling. We actually already knew this, but the numbers came out finally supporting this. And so they're asking, like, how is your job situation? Because this is really the heart of Middle America. And they're talking about job openings hitting a 2-year low. So employment must increase as we get deeper into this recession that they're not admitting to yet. But we're basically at about 6.6 to 7.2% at the moment, depending on how you figure the unemployment. And as I had kind of said before, what we're kind of expecting more of a target range is more above 20% before this is said and done. So more pain coming, more unemployment that will have to come in as it's correcting. We did also hear from Spotify as one of the indicators that they're laying off, as well as several other companies. Because Smithfield Food, they're terminating contracts, 26 US hog farms, so that's also got unemployment that will be coming along with it. And then we also had kind of like a companion story, Tyson Foods announced plans to close production facilities. And the more important part of this is they're saying that the reason they're closing these facilities is lack of demand. So, between increased cost in the feed for these animals and lack of demand, they are just shuttering the facilities. They'll be laying off, I believe it's 1,600 staff, is what they're saying. And so that's 1,600 people that will no longer have the money to continue spending for food or in the economy. So it's going to create that loop. We've also got the Walmart CEO saying consumers may not be as resilient next year. Well, of course, because as a deflation, they're talking about deflation starting to show, but really, if the businesses are not selling things or making things, creating things, there's no demand, then they need to lay off, they don't need to produce. So in a different sector, we've got more competition. We've been watching NVIDIA and the whole artificial intelligence. We spoke about this also, that NVIDIA would be getting competition. Now they've got two headwinds. The first is AMD has a new chip. It's an alternative. And then we've also got China, because the United States was sanctioning NVIDIA, made a chip breakthrough that It's not a replacement. However, it is replacing a good portion of demand that has been going there. And then on top of that, we've got US Commerce Secretary Gina saying, we cannot let China get these chips. If you redesign a chip that enables them to do AI, I'm going to control it the very next day. So they're trying to control artificial intelligence. However, when they're doing that, they are artificially closing off this venue for the chips. That's hurting the US companies. And as they've already shown us, they're just going to circumvent this through either their own innovation or different methods. It never works. Sanctions don't work. On to oil. Next story. So I also want to add, not financial advice, but this is, of course, very positive for AMD this morning, and NVIDIA might take a hit. So we'll watch those two moving in probably opposite directions today. So back to oil, talking about the whole Venezuela-Guyana thing. We talked about this yesterday, how it's about the money. It has nothing to do with the disputed territory. It's because they are oil rich and they are admitting it. So now they're talking about it's a dispute and they're going to annex that area of Guyana. But we've got Indian state refiners trying to sharpen the competition for Venezuelan oil. So everybody knows new resource. So they're just looking to basically grab that resource and make the money off of it. So yesterday we were also talking about Jamie Dimon. Now he's saying he would shut down crypto completely if he had a government role, because he was talking about how corrupt it is. And then finally the stories came out about how they've been fined over $39 billion. And they do have their own token that they had already started. We spoke about this a couple of weeks back when they rolled out with it. So this, just don't believe anything out of this guy's mouth. But when he says these types of things, it really, really makes me want to move into this space. We talked about this yesterday, but it's one more asset to get outside of their system, because you're either going to end up with the Fed now JP Morgan token, or you can purchase ones that work outside of their system and decentralize. So this is the other version you're going to get. Global policymakers still pushing CBDCs, even though they've had all the issues. They come with a complete surveillance program, as well as control on your funds, making the ability to make them expire, the ability to make them only work in certain geographic areas, so they can functionally lock you down by not allowing you to purchase anything outside of your area and beyond that. So with that, that's all I've got with you as far as the markets, but this one kind of ties in. It's an older story, however, it's growing. The momentum is picking up. So this story was initially covering the government wanting to control digital identity. So they're not together yet, but I believe they will be when they're talking about the digital currency for purchasing and then your digital identity. Those two together lock down your freedoms even more. The digital identity will lock down your freedom of movement. The digital currency can be used as a punishment or also lock down your freedoms as well, whether it's geographic or what it is that you're spending on. And they're tracking literally everything. So anyway, just something to be aware of, especially if you're new here. I know that many of you have been here for some time, and I thank you all for that. So if you have anything to add for other viewers in the comments, would like to hear that. Thank you all kindly for liking the video. If you would, it helps it out. And I'd like to just remind everyone, especially if you're new here again, live, trade, and think outside of their systems, real assets, physical assets. And until I see you again, my friends, stay free.